Good morning, everybody. Welcome back. I'm Steve here from Strategic Ways. I'm going to go through our trading results for January and talk a little bit about February. Got some great trades coming up in February. January was a bit of a crazy month, our most active month so far. 5 trades open, 1 closed. We delivered a 6.5% return in the month, which is I'm very pleased with. More than double the performance of the S&P, which is our main benchmark. That's great. But it was very volatile. The stocks were up more than almost 20% at one point, and then back down to 6.5% by the end. And the actions of the new US administration are causing volatility in the markets, and it is something we're going to have to watch going forward. I don't have a particular view on the Trump administration, but I do know he's quite an experienced businessman, so I hope he remembers and takes account of the fact that it's the market that decides interest rates and the market decides, what's going to happen with inflation. It's very difficult for politicians to force anything on the marketplace. But as an experienced businessman, I'm sure he will remember that and make some appropriate decisions. Now, let's get into the trading results. First of all, I'm going to look at the overall performance of the account. Then we'll go into the individual trades that we closed and the ones we opened, and have a look at what our prospects are for the rest of the month, which at the moment look really very promising. Next up, I'm going to have a look at the open positions to see exactly how we're doing there. This is the consolidated position, so you can see in a number of cases now we've now taken 2 trades in individual stocks, and you can see the total return down this column U, highlighted there, and it's going really well. We're substantial on almost all trades. A couple have dipped a little bit, and we can see that the 30-day return, if we look at this column, you can see the volatility I was talking about, and 3 of our stocks up more than 10%, 3 down more than 20%. I'm not overly concerned about the 3 red ones down at the bottom. If you look, we've got Qubits in there. I'm going to show the Qubits graph in a moment. We made a lot of money out of Qubits, D-Wave. SES, we've only just entered, and although it's down 38% in the month, we're only down 4%. That's because we bought it after a high, which we tend to like to do. Everything else is looking pretty good. There are a couple I'm quite concerned about. I'm particularly concerned about Bluebird, this stock we took, BLBD. It's down quite a lot from its highs. It's an electric bus not really just electric bus company, but new energy bus company, clean energy bus company, and that seems to be falling foul of some of the new regulations. We also have a couple of issues around Net Power, same sort of thing. They're a gas-powered company, and then Aris Water, which closely linked to the oil industry. So all of those are showing a bit of extreme volatility because of some of the new regulations. Let's have a look at the closed trades. So we can see the closed trades here. The one closed trade we took in the month was Meta. We closed Meta on the 14th of the month, 84% return, which is really very nice. If I just move along a little bit here, we can see that this is the performance of the $250 a month demonstration account, and you can see of the trades we've closed, we invested $1,814 in shares and made a profit of $4,852 on those shares, which is very good. The average win was 645 and the average loss 51, which is a really good risk-reward ratio. That's what we're looking for. Of course, the really big win was the December one Qubits, which put a lot of cash on the back and in the account, and we're back in again already. So that one's looking really quite promising. Now, I just want to have a look at a couple of charts about things I'm concerned about, worried about, things I want to mention. Chart for Bluebird, the yellow bus company, as I call them. You can see when we first entered at $18 over here. It was a great entry point. We just got this pullback very nicely. After that, the stock fired up to almost $60. Huge return, really, and as I started to pull back ever since. Initially, I thought I was catching the bottom about here, but now it's broken that bottom. Looks like it might go lower. I'm not going to do anything just yet because earnings are due on the 5th of February, so that's only a week away. We'll wait and see what those earnings are, but there is a distinct possibility that we'll be getting out of Bluebird quite soon. If the earnings look good and it turns around, we'll hold on. I also want to have a look at Qubits, D-Wave. This is the Qubits chart. We first bought Qubits at $1.11 over here in October. We got out at $8, which was a really nice trade, 600% return. And then, it was pretty clear that we had some hype going on here, and we don't like hype, so we got out at $8. We've since bought back in at $4.39 and making a nice profit on that second trade as well. This getting in and out is very important to us. We don't want to take any big losses. We don't want to miss any gains. We're investing in emerging technology, so we've got to be a little bit sharp on our feet, really. We've got to be able to get in and get out when we need to. Our preference is just to buy and hold for a year or two, but we just accept the market is volatile. We have to behave appropriately. So that's a look at January. Very pleased with the results there. We continue to make good profit. We continue to beat the market. But I want to talk a little bit now about what's going to happen in February and what we're looking for. First of all, let's have a look at the prospects, the things we're looking at buying in February. This is the current prospect list for February. It's quite small this time because I've been through the list already and got rid of a few things that didn't look so great. But all of these look extremely promising trades. But they're all emerging technology, so we have to tread extremely carefully. When we're looking at emerging technology, I've got a few sort of benchmarks, a few hurdles that companies have to pass before I'm prepared to invest. The first one is commercial validation. I want to make sure that these companies are actually selling their products, whatever those products may be. Secondly, I want to make sure that I can see a path to profitability. I want to be able to build a mathematical model that gives me a break-even date, and it gives me some idea of how much money this company can make in the long term. And I want to make sure that they've got the balance sheet that can support that growth. I want to make sure they've got enough money to actually get to the profits. Otherwise, we're going to suffer huge dilution. It's not the end of the world if they haven't got enough money, but I've got to be sure that I can see a path to get there. And those hurdles will significantly restrict those that we can invest in. We've got, if we look at what these companies do, we've got BWX Technologies. We're looking at that as a nuclear investment. We're quite into nuclear energy. We've made some decent money out of Centrus Energy in the past. It looks like a growing industry. Trouble is, it's full of hype. I don't want to get caught in a hype cycle. I don't like the way that Nano, Oklo, NuScale, their share price is getting ahead of themselves. We're looking for somewhere else to get into, really. We've then got a couple of companies that are looking at just new AI products. We like Gauzy. I like their intelligent glass. I like the new deal they've got for mirror technology with Ford. I think that's got real prospects, but negative equity at the moment, so we've got an issue about building that mathematical model. Exactly the same is true of Airship AI. Great AI technology. They're to do with security, and we've got a couple of AI security stocks I'm interested in at the moment. That's one of them. I sent out a note about energy recovery quite recently to followers, and down the bottom we've got two new energy stocks, OPPT and Wave. Might just delay those because of the changes of regulation and what's going on, so they may have to wait a little bit, but those ones are recording. Hopefully, we're going to get at least one, maybe two new trades to take in the month. If you want to see what those trades are, please subscribe to the Substack newsletter, because it will go out in the Substack newsletter, and hopefully we can make the same kind of returns in February that we have been doing for the last few months, and continue to build a strong buy portfolio, continue to build the demonstration account, and make us all quite a bit of money in the long term. Thanks very much for listening, everybody. I look forward to speaking to you all with an update next month. Oh, and I've got another great interview coming up this month. Interviewed the CEO of SES AI earlier in the month. It was a great interview. It led to a good trade, and I've got two CEOs that are interested in speaking to me, and one of them looks like a great trade. Subscribe to the video if you want to watch that. Otherwise, I'll speak to you all next month. Thanks for your time.